I think they like to pick winners.
Be more specific. How long has this been in the works?
Look, it happened relatively quick. You know, Tiger led one of the previous rounds with a small amount, and a couple of weeks ago, Scott Schleifer approached me and said, like, you know, looking at the fundamentals of the company, I think it's time to accelerate the growth. We have done a remarkable job over the last year working on our unit economics, route efficiency, and then the whole thing happened extremely fast.
He's joining the board?
He's joining the board.
How does that change things?
Well, you know, I don't think it will change things a lot. He's very familiar with the company, and I think we'll continue to do what we do best, and that's to execute in a very competitive space.
We talked a couple months ago, and DoorDash has also raised a whole lot of money. $300 million for you guys. Looks like around a 25% stake, perhaps. Is this still about expansion? Is it a land grab? Is it a zero-sum game for some of these delivery startups? Granted, you do something different, something more than DoorDash, that are trying to expand beyond cities into the suburbs.
Look, John, I believe, I like the analogy of a car race. You know, in a car race, the fastest car at any moment in time may not win the race. And, you know, what you see in Postmates is that we've spent the last year building a really, really good car. And now we're ready to put that on the track, and we believe it's going to be a long race. There's going to be a lot of well-funded competitors in this space. I think a lot of interesting companies. We believe that we're leading the race overall because we are so determined when it comes to efficiencies, route efficiency, and our unit economics. We believe we're in a great position.
What is the opportunity in the suburbs in terms of growth and profitability versus cities?
We started in the cities, as you know. We were really an urban company, but we explored more and more into the suburbs. We launched 131 new markets just a few months ago. We have great partnerships with QSR chains. That really helps in the suburbs. But you also have to understand the social fabric of the suburbs and of the cities that you're operating in. So I think the challenge here is for all players to find QSRs and local favorites and offer a great mix to customers.
I see profitable in 90% of markets. What makes a profitable market? Is it about categories, or is it about geography, something else?
Look, I think categories, I think geography is very important, but there's other ways how you can drive a market to profitability. There is radii you can have around the merchants that you're offering. The more efficient you are, the bigger your fleet is, the more merchants you have on the platform, the shorter your delivery times, the easier it is to drive a market to profitability.
Does that number go higher from here? Does it stay the same? Does it even come down? You know, 90%.
I think it will only get better. Yes, we may invest some more money in growth, but this will not change our unit economics or the fundamentals of the company. As a matter of fact, we're at a point where we make money on every delivery on the platform.
The players in this category that fail, why are they going to fail? Is it going to be expansion too fast? Is it going to be that their data isn't good enough to know exactly what they should be delivering to these areas they're trying to expand into?
I believe expanding too fast is a factor. I also believe if you don't really understand the logistics engine that you're building, and if you spend a lot of time on issues like route efficiency, you will fundamentally run into roadblocks down the road. You may try to win deals too fast, and I think that can make a company falter.
In terms of the goods you're actually delivering, where do you see the biggest opportunity? Is it grocery? Is it prepared meals? I mean, I know you're doing a partnership here in New York and also LA with Sugarfish. I'm living in the suburbs. I might want to have access to that. That sounds exciting. Where do you see the biggest opportunities?
Look, today 95% of what we deliver is prepared food. And on the API side, that looks a little bit different. As you know, we have a great partnership with Walmart. We deliver for Apple. We deliver for many other API partners. So for now, it's prepared food. But I believe that over time, just as they have in the past, our customers will guide us to the categories that they like to explore next.
Finally, are you thinking IPO? Is that on the plan? Is it in the playbook? And if so, when?
It's absolutely in the playbook. I said it before. I would love to take this company public. I think it's a brand, a great American brand that deserves to be public, and we really like 2019.